The Malaysian Anti-Corruption Commission on Friday said it managed to bring back and arrest an individual linked to the 1MDB scandal following cooperation with foreign authorities. The individual, believed to be a close aide of fugitive Low-Tech Joe, is said to have played a role in 1MDB and its former subsidiary SRC International. The individual is said to have arrived at KLIA-2 on Wednesday at 3:30 a.m. According to a source with the MACC, after arriving at KLIA-2, he was issued with a notice to be present at the MACC headquarters at 10 a.m. on May 4th, where the MACC has recorded his statement and searched his property on the same day. The source adds that it is believed that the individual had received illegal funds from 1MDB and SRC through Right Shaw. The individual had deposited cash into ex-PM Datuk Sri Najib Razak's account as revealed in the 1MDB Tanore trial. Prior to this, MACC, with the help of Singapore's Commercial Affairs Department, had seized Right Shaw's bank accounts amounting to $5.2 million, and investigations showed that the money was from 1MDB through Yayasan Rakyat One Malaysia. The source added that on April 26, the MACC along with the CAD had managed to bring back $16 million from Totality, which is owned by another 1MDB fugitive, KC Tang Keng Chi. Tang is presently placed on Interpol's red notice since leaving the country on June 29, 2019, where he is also charged under Section 23 of the MACC Act. MACC Chief Commissioner Tan Sri Azam Baki confirmed the latest arrest and said the MACC is working hard to bring back more assets and individuals that are involved in Singapore. He said that to date, the MACC has recovered 70% of 1MDB assets involving a sum of 28.3 billion ringgit. Lembaga Tabung Haji has appointed former Kumpulan Wang Persaraan diperbadankan CEO Syed Hamadah Syed Othman as its new Managing Director and CEO effective tomorrow. He will replace Datuk Sri Amrin Awaluddin, who has completed his 2-year term of service as the fund's chief on Friday. The Edge Malaysia had previously reported that Amrin was not keen to renew his contract with LTH, quoting sources. Following his resignation as nominee director of LTH, boss filings show that Amrin also resigned from the role of non-independent and non-executive director of TH Plantations and Bank Islam Malaysia. According to LTH's statement, Syed Hamadah, who served as KWAP CEO from November 1st, 2018 to October 31st, 2020, has more than 25 years of experience in consulting multinational and local organizations on pension design, funding, pension accounting, as well as mergers and acquisitions. LTH Chairman Tan Sri Azman Mokhtar said that he is confident that with the extensive skills and experience possessed by Syed Hamadah, he will be able to continue efforts to strengthen the Pilgrim Fund in terms of governance and operations to a more outstanding level in the future. He also thanked Amrin on behalf of LTH's board for his contributions. Eversendai Corp said its independent auditors have raised concerns about the loss-making construction firm's ability to operate as a going concern in its audited financial statements for FY 2022. Messrs. Baker Tilly Montero Heng highlighted that the group incurred a net loss of 366.86 million and that its current liabilities exceeded their current assets by 68.33 million ringgit. This indicates that material uncertainties exist that may cast significant doubt on the group's ability to continue as a going concern, according to Eversendai's filing. The group's ability is dependent on the continuous support from financial institutions and the discussion on restructuring plans for the group's borrowings being successfully concluded, as well as achieving sustainable and profitable operations or through the disposal of non-core assets to generate adequate cash flows. Eversendai said it expects its performance for FY 2023 to be promising as it is looking to secure more new projects. The group said it has already embarked on initiatives to enhance its bidding competitiveness. Eversendai said this will augment its business and operational resilience and help to deliver projects, believing that its focused efforts will drive better results for the group. Eversendai saw its net loss widen to 359.4 million for FY 2022 versus 137.08 million the year before. FY 2022 revenue declined to 897.93 million from 1.22 billion ringgit. Westports Holdings' net profit for the first quarter rose 21% year-on-year to 183.6 million due to the corporate tax rate reverting to 24% after the one-off prosperity tax that was levied in FY 2022. However, revenue for the quarter dipped 3% year-on-year to 512.9 million from 516.4 million previously, primarily due to lower value-added services, in particular storage revenue. No dividend was declared for the quarter. In a separate statement, Group MD Datuk Ruben Emir Nyanalingam Abdullah said that despite inflationary pressures and slowing economic momentum in many countries, Westports handled more transshipment and gateway containers, which amounted to 1.03 million 20-foot equivalent units or TEUs, the second highest for the group on a quarterly basis. Ruben said moving forward, the port operator expects an overall uptrend in decarbonisation costs as Westports implements more initiatives to achieve its commitment to net zero carbon emissions by 2050. Ruben adds that the proposed Westports container terminal expansion reflects the group's financial and strategic commitment towards maintaining Port Klang's overall competitiveness in Southeast Asia as a transshipment hub. Fraser and Eve Holdings is optimistic of delivering a higher bottom line for FY 2023 despite higher commodity costs due to the rising interest rate environment. CEO Lim Yu Ho said the group expects F&B sales growth in Malaysia to continue with a positive contribution from Cocoland Holdings, where F&N had acquired the entire stake in the snack and candy maker in June last year. He says that the positive sales momentum has actually continued past the festive season as the economy returns to normalcy. According to Lim, F&N is in a strong position financially and that it will be able to deliver higher earnings despite the significant increase in interest costs due to the recent year's capital expenditure investments. He adds that the group also aims to improve sales volume for its Thailand operations and that this will be driven by the return of international tourists to Thailand as well as recovery of export sales due to China's reopening. When asked whether F&N would raise the prices of its products to cushion any decline in sales volume, Lim said that the group are always agile in its pricing strategy and as such will adjust accordingly depending on the current market conditions. For the first half of FY 2023, F&N saw its net profit jump 61% year-on-year to 299.98 million, while revenue improved 9.5% to 2.43 billion versus the 2.21 billion that it posted the previous year.